Hey traders, in this video we're going to look at 5 rules for position sizing. Stay tuned. Hey traders, a very warm welcome to you. Okay, so position sizing is quite a diverse topic. On one hand, you've got people saying you should do this. The other hand, you've got people saying do this, only risk X%, only do this. We should go all in on this and that. And it's such, people have got one end of the scale to the other. I don't think there's a right or wrong answer. I've done videos before where I've talked about being extra aggressive with your position sizing. I've also done videos where I've seen people who said being extra conservative with your position sizing. So I've got a few rules here that I think encompass all that, but still allow you to be a little bit more aggressive, a little bit more conservative, depending on where you want to be in the scale. Because the big thing is, guys, is that if you've got a small account, which many people start off with, you're not very likely to grow that into a large account by only risking a very small amount. That's the big problem I have when people say, hey, you should only risk, a very small percentage per trade. I get that and I understand it, but many traders start out with a very, very small account. And so, yes, they could do that. And if they did very, very well, maybe they'd start to improve it. But sometimes you want to make those big leaps. So I get why people want to take a little bit more risk on. On the other side of it, a lot of people say, well, if you've got a small account, then learn with a very small amount of size. And then when you're ready, you can perhaps put more funds in. So like I say, there's no right or wrong. It's all about comfort level as well. And we go back to discipline and psychology. Anyway, let's get on to the rules. 5 rules for you. Let's go. 1, 2, and 3 are all very similar. And I want to show you why. Number 1, size is large enough. What do I mean by that? I mean the position size has to be large enough that it's meaningful to you. To me, if we're talking about trading for capital growth, for account growth, not just for testing a strategy, not just for testing things, not just for starting out, actual genuine trading for building an account, you need to have a position size that is large enough so the trade is meaningful for you. There is no point, in my opinion, in trading such a small size that it means nothing for you if you get the trade right. If you've got a decent size account, you're trading at such a small size that it makes no impact to the account. Yes, there's a value to that in terms of learning or into doing something else. But in terms of trading, like I say, for the growth of the account, it makes sense to have it at a position size that's meaningful enough. But look at number 2, the size is also small enough. What do I mean by that? It's not so big that it's going to be catastrophic to your account. Number 1, it's not so big that your psychology is so on edge with that trade and you can't even sleep, you can't even watch it, you're looking at every single tick, you're trading from a different part of your brain. So number 3 is the size should be between 1 and 2. There's a sweet spot for position size where it's meaningful for your account and it's not too big that it's causing catastrophic loss for your account, it's causing way too much. You need to find that sweet spot. And for me to say numbers, I could say, oh, X%, X%. I think you need to find it for yourself. And only you can do that by saying, okay, well, am I comfortable with losing that in my account? Because one generalization, I'm just digressing slightly, this is an important point. One generalization people make is they say account size is the be all and end all. Many people have a net worth of X. They would allocate, let's say 20% of that to their trading business, but they might only put in, 100th of it just to start out, but they're still prepared to risk more. So to frame everything on account size isn't always sensible. Many people will just put a smaller amount in, but actually have more that they want to invest behind it. So, you have to think of it in that way. But this is important. If it's too big, you're going to get wiped out. If it's too small, what's the point? You're not going to feel the benefit of it. It's that sweet spot in between. If there isn't that, then don't trade. You need to find that and find out how it works for you. And that's going to be based on volatility, based on account size or net worth or really risk capital, I suppose is a better way of doing it. Anyway, let's move on. Number 4, prepare for 10 losers in a row. There will be a time, even if you've got a high probability trading strategy, where you get 10 plus losers in a row. It is almost mathematically a certainty. In fact, it probably is a mathematical certainty. If you trade for long enough times, you will get 10 losers in a row. So prepare for that. Maybe you can prepare for 10 or 20 losers in a row, but let's just say 10 for now. If you take 10 losers in a row, how is that going to affect your account? Now, obviously the smaller position size, the less effect. We get that. There's no point stating the obvious. So we have to find this balance again between all these things. If we're risking 10% of our account balance, at some point we will blow up because we're going to lose 10 losers in a row. We're going to lose all our money, unless we are scaling down the position size based on obviously the new balance of the account, of course, then that's going to change the dynamic. But let's not overcomplicate things. Prepare yourself and say, okay, if I have 10 losers in a row, where will that put me? Yes, that's damaging. Well, can I come back from that? Yes, I can. Is it going to affect it too much? No, it's not. All right, that's a good starting point. Now let's look at the position size. Now let's look at this. Now let's look at that. So, and obviously this doesn't come down to actually how much we're doing per trade. We're going to know this is monetary value. And I've done another video before where we work out exactly the position size of the trade. And actually, I remember when I was very actively day trading kind of futures markets every single day, I would have a fixed position size because I kind of knew exactly what my stop loss was going to be. It was a fixed stop based on the current market conditions. So I could very, very quickly just take that. If you are swing trading, or if you're sort of dabbling in and coming out a bit more how I approach the market now, which is getting extra aggressive when there's opportunity, stepping back when there's not, you need to make that extra step to make sure that your risk is relative and relevant for the volatility that's going on, the range that's going on. You can't just go in and say, oh, well, that's my normal size, and actually things have changed because you've not been away, you've been away from the screens for kind of 3 or 4 days or whatever, but suddenly it's all going crazy. You need to readjust and suit. So position size large enough, small enough, shoot between 1 and 2. Prepare for 10 losers in a row. If you can't take 10 losers in a row, you have to dial the position size down and deal with that. And number 5 is keeping rules simple. It's very easy to kind of overload yourself with rules. I must have this, I must do that, risk X, risk. Simplify it. You know, just round it off a little bit. You don't have to be so accurate. The whole point of risk is that you're not doing massive damage when things go bad. Which you will have losing trades. This is normal. You will have a series of losing trades, and you will have winning trades. So you want to reduce the damage on the losers and make sure you're making enough money on the winners. We're not talking even about strategy here and risk reward ratio. We're just talking purely about position sizing so that you can stay in the game and keep trading when the inevitable happens and you have a string of losers, but making it worthwhile enough that you're not trading so small that you think, what's the point in even getting involved in it? All right, guys, there's my 5 rules. Keep it simple as well, number 5, which we just talked about. Don't overcomplicate stuff. Any of you got, stick them in the comment section below. See you in the next one. Take care. Keep it risk managed. Goodbye.